Direct from the Six, world-renowned, Canada's largest city, with Canada's biggest thinkers, visionaries, and hustlers. This is Startup Talk, featuring the founders, funders, innovators, and community leaders who've led Canada's startup ecosystem right here in Toronto. You'll hear the challenges, the failures, the successes. Toronto's Startup Podcast gives you the full story direct from the entrepreneurs and influencers who've made a difference. Now, the host of Startup Talk, the founder of TorontoStarts, the Startup Coach.
How does a regulatory framework differ from raising capital privately versus publicly in Canada?
Yeah, I think that's a really great question, and it sort of summarizes an important concept for people to be aware of. When you're raising capital publicly, I'll start with that sort of first. When you're raising capital publicly, not only are you going to the market the first time with your IPO, when you sort of approach the public markets and you're selling shares for the first time, but also because the markets are public, you need to be providing information and ongoing reporting to the market and to the regulators so that a secondary market can exist. So just quick definition, a primary market is when you are the creator of a good or service and you're selling it directly to a customer. So I make hats, Craig is buying the hats from me. A secondary market is when people are buying or selling goods that have already been created by somebody else. So Craig has 15 hats, they're vintage, really nice hats. He then wants to go out and sell his vintage hats. He didn't make them, he's owned them for a while, but he's taking good care of them and wants to sell them, or like Jordans or whatever it is. When he's selling that, that's now a secondary market. So when you look at the public stock exchange, the majority of transactions taking place there are actually secondary transactions. It's investor number one selling to investor number two. The company is only selling shares to the general public a few times. They'll have their primary issuance when they actually go and do their IPO and launch on the market the first time. And they may have some subsequent, secondary issuances or other times when they have a new issuance to the market, but it's not as frequent. So the responsibility of the regulators and of public companies is really just ongoing reporting and meeting those requirements. So audited financial statements once a year, accountant prepared internal statements provided quarterly, being available for investor calls, all this sort of stuff you're doing on an ongoing basis so that you can ensure all market participants have equal and fair access to information about your business so that the market can buy and sell in hopefully an efficient way. Now, private companies are doing things quite differently, right? If we assume that the public company setup is the quote unquote norm, private companies do things a bit differently from the norm. Private company transactions are almost always primary. So it's almost always the company selling shares to investors, not investors selling shares with each other. Also, there isn't ongoing reporting that's structurally required by the regulator. There's no secondary market. And so the regulator is more focused on ensuring that people in the private space are not engaging in fraud and are doing things in a way where as they start to get bigger, as they start to raise more and more capital, the required reporting gets larger and larger. So initially, when you're raising smaller amounts from a few people, there isn't that much or there is no reporting that you have to do. The main thing the regulators are concerned about is ensuring that when you do this private transaction, both people engaged in the private transaction are protected. So you, as the company, are making sure that people who are investing in you are either accredited or friends and family so that they have the right skills to judge whether the investment in you is right for them. And then, of course, you have them sign the risk disclosure so they know, hey, this is a private investment, high risk, I know what I'm getting into type thing. As you start looking to go to investors that you know less and less well, so you want to start marketing to a broader network or you want to do crowdfunding or do an offering memorandum, you want to go further and further afield, the regulator slowly starts increasing the requirements of the work that you have to do to, one, provide information to potential investors, but two, to make sure that investors are understanding and aware of the risks that are involved. As you start raising more and more capital, they also want you to start using intermediaries who can help protect the funds and ensure that they're flowing properly and there's no fraud involved. And that's sort of where exempt market dealers start coming into play, which is what my business is. So we are licensed to sort of act like very miniature broker dealers, sort of exchanges in the private market to help the flow of funds from private investors to private companies so that people can know they're doing it in a safe and sort of compliant way. And then eventually you get big enough that, it might make more sense just to go public. But the way the regulators operate is a little bit different, public to private. With private, they're more focused on making sure that people are suitable and they know the risks involved in making the investment and there's nothing fraudulent there. Whereas in the public space, it's more about ongoing disclosure and making sure all the information is being evenly distributed on an ongoing basis to investors.
So I want to say thank you, Alex, for taking the time. You want to tell us again what you and Equivesto do and what are all the resources over there that Equivesto people should go check out?
Yeah, absolutely. So Equivesto is an exempt market dealer and an online investment portal for Canadian small businesses, startups, private funds looking to raise capital from Canadian resident investors. So if you are looking to do an angel round and you want a place where somebody's done a bit of due diligence into you already, they've helped you structure your whole round, plan out the valuation, got all the right legal documents, and they provide a digital location for you to actually go ahead and transact, certainly come check out what we're doing at equivesto.com. We also have a really robust learning center. So a ton of what we talked about here already is in our learning center. We also have a bunch of courses for free in our learning center on investor readiness. What are investors looking for from you? All this sort of information is there. It's totally free. A lot of it is webinars that we created with Craig. So feel free to go and consume some of that information. We want to try to help make capital raising easier and more rewarding for all Canadian companies.
This has been Startup Talk, Toronto's startup podcast. For more exclusive content, the episode vault, and to be part of TorontoStarts community, visit TorontoStarts.com. Get your name on the newsletter mailing list and check out our upcoming events. For more episodes, subscribe now. And please recognize the time and work behind the scenes put into connecting you with the biggest visionaries, entrepreneurs, and innovators in Toronto by leaving a 5-star review. Join us for more next episode from Toronto's most active entrepreneur and startup community on Startup Talk.